Hi, and welcome to the next session of our venture and capital interviews. Today I've got a partner at Antler. We've got Ant Millet. Welcome, Ant.
Thanks very much, Steve. Great to be here.
So, mate, obviously Antler's been making a lot of noise over the last sort of 18 months. So firstly, what I'd love to do is sort of kick off about your background, because I know you've got your sort of own founder story as well before sort of kicking off with Antler. So sort of love to go into your background, and then sort of love to go into sort of talk about Antler and how you're working with companies.
Sure. So I'm from London originally, born in London, grew up in London, started my career in investment banking. And after 4 years of doing that, I worked out I was more inspired by my entrepreneurial clients than I was by the people up the food chain. So decided to jump out and try my hand at being involved in an early stage business. And actually took over the family business, which is a bricks and mortar sports store, to turn it into an online e-commerce business. Over a 5-year period, we turned it from a business that was turning over £500,000 to £35 million in turnover, and grew it into 9 countries, with the base still being in London, but being able to essentially service some big economies around the world from there. We then got an offer to buy the company from JD Sports, and decided to sell it at the end of 2013.
This is literally the one sports retail brand that I know in the UK.
There you go.
The only one.
Well, there's not many more, and where we were really successful was that we were operating with kind of prime or high quality sports equipment for amateurists who were members of sports clubs, etc., but they wanted the high quality equipment. And the high street had been decimated by JD Sports, which was much more kind of going down the fashion route. And so we did really well due to the lack of availability of high quality sports equipment on the high street. Similar to kind of how you've got the setup here, with really Rebel being the only dominant, pretty much the dominant sports brand.
Yeah.
I then moved to Australia at the end of 2015 with my Aussie wife. So like all good Aussies, they eventually come home and bring everyone with them. And then launched a business here in early 2016 with a guy called Marcus Calbetza, and the business was called BrickX. So it's online fractional property investing. Over a near 3-year journey, grew that business to have about 12,000 investors on the platform, about $25 million invested in residential property on the platform, raised about $12 million in funding from leading Australia venture firms. And then at the end of 2018, stepped away and came and joined Antler as a partner, to help really build the next wave of incredible startups here in Australia and globally.
So with that choice for you, I imagine BrickX would have definitely felt like your baby. What was the sort of key reason you thought, okay, I want my next challenge? Had you sort of set up the business where it was sort of operationally taken care of, and you thought, okay, I want my next sort of starting setup? Or what?
Yeah, that was a good learning for me, and seeing where I really enjoy spending my time and getting the most kind of personal reward and value out of is that early stage of business creation, really from 0 to 10 rather than 10 to 100. We had built all of the very complex technical and legal operations around BrickX, and many people had tried before and failed, and actually tried while we were doing it, and certainly didn't get to the levels of success that we had. And we got to the business where it was highly automated and operational. The business was going through the business was going for a bit of a tough time in 2018, but it was less to do with our business and more to do with the property market. Had a pretty tough time in 2018. And as we looked to kind of where we wanted to kind of cut costs in the business and slow spend down, it was obvious that it was going to be a hard business to grow during that period. And so it felt like the right time to explore different opportunities or different directions of strategy. And that was a time where I decided to step back from leading the business. I still remained involved and on the board.
Yeah, gotcha. And so setting up Antler, now Antler's already had a proven sort of model in Singapore at the time, and you were partnering with B to kick it off?
Yeah, absolutely. So I think when I joined, I'm not sure that the model was super proven. Before I signed my my contract to come on board, I went to Singapore to their first demo day. And that was the first ever program that they had run and the first ever demo day that Antler had done globally. And what became really striking to me and obvious was the impact that Antler has in de-risking the founder's path in creating a really highly valuable and successful startup, and the advantage that we gave the founders in the earliest stage. And the kind of key things that I saw when they presented on stage were, wow, it's amazing to see how much these businesses that are 4 to 6 months old have achieved. These are businesses that look like they're more like 24 months old. And having spent the last 10 years in startup land, I guess, and having heavy exposure, you know, I would like to think I've got pretty good, you know, radar on how far companies have been able to progress in what amount of time. And I was just blown away by the strength of the team and what has been of the teams that were presenting and what had been achieved in that amount of time. And so the next day after the demo day, I went and spent time with the teams to go try and kind of unpick all the black magic and work out what it was that had got these guys to such a progressed stage so quickly. And it was really the Antler model and the setup of throwing 100 very hungry, motivated, determined founders together in an environment where they're somewhat competitive. They all want the same thing, which is to form really strong teams and form a business and have that get validation as quickly as possible. No one was wasting any time fundraising, which is a huge time drag on companies and can be quite a disruptive process. And Antler was able to bring them investors, first customers, advisors, to the point that people were able to solve in minutes and hours what otherwise may take people outside of Antler weeks and months. And it really enabled these companies to kind of jump this kind of chasm of ambiguity, which is very much chicken and egg when you're starting an early stage business, of trying to raise money but having not got the traction yet, but needing the money to get the traction to raise the money. And so we've seen Antler businesses come out of Antler that are less than 6 months old raise you know, anything between kind of $500,000 and 2 million Aussie dollars within a few months of coming to build a business with us, and really giving these guys some serious firepower to support what they're doing. And I thought that was pretty unique and something that we hadn't seen before.
So just to go a step back, because obviously you're sort of well entrenched into the model. For those who haven't who don't understand what the Antler model is, can you give it a bit of an explanation as far as how your process is, how you choose the founders, or what is that sort of process?
Sure. So Antler is the world's largest company builder, and we're a global VC. And the key difference between us and I guess other VCs or incubators and accelerators is that we start with highly talented individuals. And these individuals come to us from all walks of life and all walks of experience. We have everything from 3-4 times serial entrepreneurs to domain experts out of industry, research scientists out of universities, and former CTOs or lead developers and engineers.
And so, sorry, just to stop you, why do they come directly to you rather than sort of just doing their own thing or sort of finding their own opportunities?
And so what Antler does that is quite different is we're able to break down the barriers to entrepreneurship as we see them. So we're in a world where the wonderful kind of maturation of technology means that for a few $1,000 you can launch a business. But the things that really hold incredible people back and talented people back are what we call the barriers to entrepreneurship. So I find it really hard to form a truly exceptional co-founding team, to find those co-founders and convince them to leave their jobs or whatever they're doing. I've got a great idea. I may have some early traction with it, or my mum and dad and my family think it's a great idea, but I'm just not sure if it's what I should be dedicating the next 5 to 10 years of my life to. Yeah. As I mentioned earlier, raising funding is really challenging. And Antler, someone who comes to Antler knows that within 10 weeks of starting with us, they'll be pitching to a kind of all-star investment committee with local and global Antler partners, as well as partners from Australia's leading VC firms. And we also give them a platform to build not just a locally relevant business, but a globally relevant business.
And
finally,
so with that matching up of people, obviously the human part's always the hardest part in startup. And typically,
yeah.
when you're in that startup mode, it's high pressure. Everyone's working hard. There's long hours, and effectively that sort of founder-co-founder relationship is effectively a marriage of some sorts. How do you find that sort of? How do you help the sort of founders navigate that sort of early part, which could be typically problematic? For sort of managing energy and managing relationships?
So the first thing that Antler does to really increase the chances of forming in terms of forming high-performing teams is we get 100 people, typically from a couple of thousand applications to each of our programs, into a room at one time, which solves a lot of issues. There's a lot of work that goes into that. And it shouldn't be underestimated how much you're going to increase your chances of forming an incredible team by having all of these people in a room who've already quit their job. They're there to do the same thing as you, and they're on the same timeline as you. What we do is we then provide them with tools. We've got a proprietary tech system that enables people to navigate the cohort in terms of identifying who are the people that are in the cohort, what skills do they have, what have they done previously, what are their values, what are their particular areas of expertise in a sector or sectors they want to build in. And then everyone gets an opportunity to present themselves to everyone else, talk about what interests them and what motivates them. That then enables everyone in the cohort to then, I guess, narrow down to the kind of top 20 or 30 people that they think would be a good match for them. And we spend a lot of time emphasizing complementary co-founders and thinking further ahead to team product fit. So if we're building highly scalable technology businesses, the majority of them are going to need a tech co-founder. And so we make sure that the commercial co-founders and the domain co-founders are searching for the tech co-founders. We organize a lot of design sprints in the first few weeks. The first few of which Antler puts random combinations of people together to get them to get exposure to other people in the cohort and get an appreciation of other people's skills and personalities. And we insist on creating them to ensure that people don't just go and form teams with people like them and get an appreciation for the diversity within the cohort. And then after that, it becomes a little bit more self-managed or self-navigated in terms of people deciding who they want to work with. And a lot of that comes through the time we give them in the program for networking, so coffee chats or whatever it may be, or in this program, a lot of Zoom calls. But it's a filtering process to get down to kind of the top 5 to 10 people that you think best suit you, that you ultimately can form good chemistry with, and that you can see you ultimately spending more time with these people than your own family over the next 5 to 10 years.
And how many people are typically in a company together? Are you bringing together 2, 3, 4 people?
Yeah, it's generally 2 or 3. We find 2 or 3 is the right amount. We think that every company ultimately needs to have commercial nous and expertise, domain expertise, and technical expertise. And where the domain expertise kind of is covered, or that person also has the commercial expertise or the technical expertise, you tend to find the companies are 2. Where the domain person doesn't, then the companies end up typically being teams of 3.
Gotcha. And after they've gone through that, so they've gone through that process, they've now met people that they're going to be working with. Do they then go through the process of deciding, okay, what are we going to build now? So it's team first, if I'm getting this right, and then it's onto okay, what product are we going to create?
So companies can come together kind of in 3 different ways. One can be team first, where you've just got an incredible, you can just see incredible complementary nature between the team, all very kind of experienced people with great track record. The average person coming into us has been working for over 10 years. So these are quite experienced people. So it can come really around the team. The second way that these teams come together is around a shared passion for for building a product in a particular area. And then, of course, the team comes around that. Or the third way that it comes together is really around an idea and the domain experts, where someone's coming in and promoting, this is my idea, this is what I've been working on, or this is a problem I've seen in my industry for the last 5 years. I can't believe no one solved it. Who wants to come and solve this with me? And typically, across the 100 or so people that are coming in, they'll generally come in with anything between 1 and 5 ideas of their own. And it's really through the cohort that we say to everyone, look, go and explore your ideas, go and try and validate it and get high conviction on them. But the second that you find something, an idea that's better than yours, or a bigger opportunity than yours, or more highly validated than yours, that makes sense working on, be prepared to drop your idea and jump onto that. And what ends up happening through this kind of 10-week phase, beginning phase of our program, is that you end up getting incredibly strong complementary teams coalescing around the best ideas, and they really get promoted up to the top.
Gotcha. Now, in that 10-week program, are you guys, at some stage, Antler invests in each of these companies, don't you?
So we do. So through the first 10 weeks, we give the founders a stipend. So we pay everyone $6,000 that's in our program a stipend to help cover core living costs. And that does make a difference for some people, being able to come and build companies of us and not. And we're truly trying to democratize entrepreneurship to get the best people in, irrespective of their financial situation. And then at 10 weeks, we then hold our investment committee where the teams come and pitch. We have sitting on our investment committee, as I mentioned, myself and Bede, the local partners, a couple of our global partners from around the world, locations around the world. And then also on this IC coming up that we've got at the beginning of September, we've got 17 of the leading VCs, including Blackbird, Airtree, SquarePeg, etc., sitting on that IC, helping us make those investment decisions. And if a company is successful in getting through the IC, then we'll then invest over $100,000 for a 10% stake in the business. And we'll then help them continue to scale and grow locally and also globally. One of the main reasons that people come to build businesses with Antler is not only do we de-risk their journey in terms of helping them form really strong co-founding teams, validating their ideas, give them a clear path to capital, helping them support them in those early days with early money and a stipend, but we also open up our huge network to them. So we've got 60 advisors in Australia that are quite hands-on with the companies. We've got close to 200 investors in our venture capital fund that are heavily engaged with the cohort. But we're also doing everything that I've just mentioned in terms of this large operation in Singapore, London, Oslo, Amsterdam, Stockholm, New York, Nairobi, Bangalore, Beijing, Berlin, Sao Paulo, and we've got people on the ground in LA and San Fran as well. And we're one global VC that essentially is looking to help all of our companies be successful, irrespective of where they've started from. And that's really quite interesting because, as we're starting to see here in Australia, we are capable of building world-class global businesses and you can see Canva and Safety Culture and Culture Amp and Atlassian, etc., and the list goes on. And we've got the people here that can do it, but we don't always have the strength of networks and strength of expertise to be able to help all the companies that have the potential to become global businesses. And this international network, and us being one global VC, means it's very easy for a company here building with Antler Australia to launch into the US or help them with investor introductions in the US. And of course, the brand of Antler over there really helps in terms of getting these guys in front of the leading VCs.
I was going to say, how would that work? So say you've got an Antler Australian company and you want to introduce them to, there's an opportunity for that company in Brazil, for example. How would you then go about sort of introducing them to that Brazilian partner?
Yeah, so I mean, we've done this already. I can talk hypothetically to that, or I can talk in terms of what we've done with some of our businesses here in Australia, but ultimately we're very close as a global partnership group. We have regular calls and we discuss the companies that need to look at international expansion, and we essentially take up responsibility for helping those companies land in another country, and whether that be through, getting to know the company, understanding what they want, identifying the local investors or the advisors that can help them and really support them through that establishment. So a great example from our first cohort is a company called Zalient, which is a deep tech computer vision business that was formed in the cohort. The founders met in our cohort. They're commercializing some university research. We invested in them. We identified that, as a deep tech computer vision business, it was likely to raise its significant later rounds of funding in the US. So we incorporated it with consultation of our partners in the US. We incorporated it in the US straight away to make that attractive to US investors. We then, a few weeks after we'd invested, introduced them to a number of investors and helped them raise close to $2 million in funding. They then started establishing a US presence and hiring some employees over there. And they've now gone to raise a subsequent round of funding as well. So this is a company that a year ago didn't exist. They've now gone through 3 rounds of funding. They've got employees in the US and Australia and a very global, investor base on their cap table.
That's great. And how many, just to give context, how many companies would altogether not just go through the Australian arm, but also through the international arms in the course of a year?
Yeah, so in the last 12 months, we've had over 50,000 applications to come into our programs globally. We've had, I think it's about 1,400 entrepreneurs work with us, and we've created over 200 companies in the last 12 months. Our run rate now is closer to creating about 350 companies a year. We're industry agnostic, so we are genuinely creating companies across every single industry you could probably think of that's practical, that is tech enabled. And in Australia, more specifically, in the last 12 months, we've invested in 25, or created and invested in 25 new companies, and I suspect we'll probably make another 10 to 15 investments in the beginning of September.
Interesting. And obviously it would have been fascinating for you to watch those first companies go through the first cohort. What does that look like for them now? It's sort of been 12 to 18 months down the track.
We're really impressed with where those companies are at now. COVID coming has been interesting because the companies were almost so early that they didn't have huge staff numbers still, and they didn't have huge amounts of revenue. So they were able to kind of just keep executing on their path with some minor tweaks. A large number of them have actually been fundraising through the COVID period, and very successfully as well, which has been fantastic, without really taking too much of an impairment on their likely valuations that they were hoping to achieve. And so of those first 13 companies that graduated from us at the end of December, 10 of them have gone on to raise further funding, and all of them are still in operations and still exist. So we're really happy with where they're at. We created another 12 companies in April, and 6 of them have gone on to raise further funding as well already. So we are finding that the companies that come out of Antler are able to raise funding quicker, largely due to how fast they've been able to execute and where they've been able to get to, the strength of the teams, but also comfort from the investing community on the strength and rigor of the Antler process, the due diligence that we go through. Over 200 hours of due diligence before making what is ultimately a friends and family investment size investment, such that we're finding the investment community are happy to commit slightly earlier to companies coming out of Antler, which means that these companies just continue to move on at a pretty staggering pace.
Gotcha. And those people, those additional funds that are coming through for those companies, who are they coming from? Are they coming from VCs? Are they coming from high net worths?
They're coming from a mix. So we've got a number of companies that have been backed in the portfolio from Aussie VCs and international VCs. So from Aussie VCs, Tempest Partners is one that's backed a company called Aurelius that's doing addiction, helping with the recovery of addictions. We've got a few that Spring Capital is one that's just invested in around with Avertro, which is a cybersecurity headquarters business that we've got. And then we've got Global Founders Capital, have participated in with one of our companies here as well. And there's a couple that are in due diligence at the moment with Aussie VCs. So we're getting really good interest from VCs. A number of family offices have participated with the companies as well. So Australian family offices are very engaged and have been supporting our cohort. And then the rest of them are high net worths and angel investors, mainly local at this moment in time. But we are seeing increasing interest from international investors, really because there seems to be this very obvious arbitrage of being able to invest on lower valuations in Australia relative to the rest of the world. But actually, again, with this kind of additional, I guess, validation that we are able to create world-class businesses. So there's increasing focus over here.
And as a final question, what would you say would be some of the, like in having a startup, in that sort of startup process, there's always different challenges you're going to face. Like there's no amazing business which doesn't have its own problems that they need to fix at the start. What would be the key advice or key tips you would have for any other founders or investors that are investing into startups that you would have seen in this last sort of 12 months of how you've seen companies successfully navigate different problems or different challenges?
I think it's really about honesty and transparency. And I think that it's so, it's great to hit these kind of early milestones that you're setting yourself as a company, and fundraising milestones and number of customers, etc. But really, these businesses are on their way to becoming real businesses. But in the early days, they're really, they're not really at that stage yet where they're sustainable businesses. And I think it's worth not getting too carried away with the validations or the milestones that you're hitting, which are really milestones to survive rather than milestones of success. And really being able to kind of celebrate them in a way that of achievement, but also relief, and then keeping absolutely focused on what it is you need to do next to keep the business moving forwards. And I think for a lot of our companies, well, for every company, but I spend a lot of time talking to our companies about fundraising is just a means to an end, and you'd really rather not have to do it. And it's great to have the validation that there are other people outside of Antler and outside of your friends and family that believe in what you're doing. But ultimately, every time you take on funding, you're adding to the burden of needing to make it a success and delivering a great outcome. And so I think it's really being quite honest and truthful with yourself and your colleagues around what it is that you are achieving. Are you on the right track? Is this making sense? Constantly looking at the fundamentals and making sure that you're understanding what is going on with the business, and really trying to be as much in control of your destiny as you can, rather than getting carried away with vanity metrics. And I think that that's true, and I think most people would agree with me in that. But that's something that in the startup area, I try and kind of remove the hype and the hysteria out of it, and bring it back to kind of keeping the conversations very real.
Gotcha. And any final tips you would have for either investors or companies?
Look, I think I'm incredibly excited about the next 18 to 24 months. I think the change that COVID is going to bring about is going to be hugely impactful for the startup sector. I think now is a really fabulous time to go and start a new business, whether you come to do it with Antler or you do it outside of Antler, in terms of the opportunity to disrupt the way things that have been done previously. We're seeing huge availability of displaced talent at the moment, and we really do think that the foundations of building a great business are fundamentally the amazing people who start these businesses. But we're also seeing a huge slowdown in corporate innovation, and budgets being cut left, right, and center. So if there was ever a time to go and disrupt an industry where the incumbent's going to become a little bit sleepy, then now's a great time. So we do think that the next 18 to 24 months will just be really sensational. And I encourage anyone that's been thinking about starting a business, or has had that idea in hibernation and thinking about when is the right time, and thinking maybe that now is not the right time because of COVID, we would disagree and say now absolutely is the right time.
Brilliant. Well, Ant, thank you very much for your time. Really appreciate it. And congrats to Antler and the entire team. I said, we've loved watching you. I said, I love what you're doing, especially for that early stage, because the bigger we can create the ecosystem and the more opportunities we can create, the more people we can get involved into it, the more it means innovation from Australia will then can have an impact in the world. So love the work you're doing and thank you for your time today.
Cool. Thanks very much, Steve.